Howdy, Jacob here. Today we're looking at NewMarket Corporation in the chemicals industry, 5.6 billion. A bit higher enterprise value, it's just under 6.2 billion. But founded in 1887, looks like they primarily engage in the manufacture and sale of petroleum additives. Okay, growth has been very low and pretty roller coaster like, but averaging low to mid single digits. On the revenue side, gross margin is nearly identical to what it was 10 years ago, with operating margin actually up a little bit. I do like that earnings per share is up quite a bit more than revenue, and their dividend is also up quite a bit more than their revenue. Return on invested capital looks amazing at 20%, but this could likely be due to repurchasing of shares. That does inflate your return on invested capital. And they've been around since 1887, so they've had quite a bit of time to repurchase shares, possibly. Their balance sheet shows 112 million cash on hand with 644 million long-term debt. That 500, 600 million long-term debt in relation to their 5-year average free cash flow is less than 3 years. So I'm not concerned with that debt at all, and not concerned with the business, especially since they've been around since 1887. I think that they would have a traction of what they're good at, what they're not. The use of free cash flow is nothing on acquisition, really. There was just one large acquisition relatively in 2017 of 184 million. Otherwise, a little bit of reinvestment, quite a bit of share repurchases, a little bit of debt pay down, and a little bit of dividends. That dividend payout is probably 30% of their 5-year average free cash flow. So I'm definitely not concerned with that dividend hindering their ability to grow the business at all. Looks like they're pretty much just handing the money back to their shareholders through share repurchases, paying a dividend, and then making the business more efficient by reducing the debt figure. So I think that's pretty much what I would do. I mean, if I have the capability of investing at these double-digit rate of return, I'd absolutely reinvest in that way. But right now, they're just really giving it back to the shareholders, which, I mean, it's almost 40-year-old company. Like, what is their growth ahead of them? What's the reinvestment opportunity? Probably not. Probably just giving it back to the shareholders as much as possible. And so this might be a business I want to get pretty cheap due to the fact that I don't know the growth ahead of them is that substantial. So let's see, 82% growth, 13 P price free cash flow. So still less than the market average because I don't think the growth is there. I do think that it's a consistent business in the fact that it's been around for as long as it has. I think that's positive, but I think the growth is really, really going to push it down a little bit. For margins, I don't like that free cash flow is a little bit lower consistently than earnings, but recently it was higher, so I'm not terribly concerned about that. But let's do roughly in line with average. Share change, 1% would be about 56 million. So they can definitely afford 100 million of it, and I think that seems pretty fair to me. So let's do 2% a year. That would be about 30%, 35 to 40% of their 5-year average free cash flow. Their dividend, let's increase that 5%. So that's just increasing their payout just a little bit to where by the end of 7 years, maybe it's 40%. It's still not a big deal and still not an immense amount of their free cash flow going towards the dividend payout. And it is leaving a little bit of money for acquisitions that makes sense. Debt pay down because they still do have a little bit of debt. But, I mean, really, it's just not cheap enough for me yet to really want to get into the business. I think that, at least from here, we're saying it needs to fall 62% before you get the return I'm looking for. And to me, I don't think the growth is necessarily there to really get you that sexy rate of return. So you're going to want to get this pretty cheap. But hopefully you enjoy the video and have a great day.